Hello, I'm Danni Hewson, Head of Financial Analysis at AJ Bell, and I'm joined by James Flintoft, Head of Investment Solutions at AJ Bell. We're going to be discussing the performance of AJ Bell funds over the second quarter of the year and taking a look at what might happen over the next few months. James, thanks for talking to us.
Hi, Danny.
So, what have been the main talking points for markets this quarter?
I'd say there were 3 or 4 talking points really dominating at the moment. Inflation is still there as a theme, and obviously the impact that can have on interest rates, but also economic growth and judging the recovery from the recession that we've had in the UK. And then on top of that, politics is really coming to the fore at the minute. Generally, the mood in markets has been good. Economic growth seems to be picking up in a couple of key regions like the UK and China. Inflation is coming down. Notably, in the UK, inflation is now back at the 2% target, although it might bounce back up a little bit in the coming months. And that's prompted the Bank of England to think closely about interest rates and where they're going to head. They've obviously held off in June because of the surprise of the election in early July, but they'll be revisiting that conversation in the coming months, I expect. In terms of politics, that's really come to the fore this quarter. From South Africa, Mexico, India and France now. It's having a real impact on markets. So that's something that was expected at the start of the year, but it's really coming to the fore this quarter.
So James, how did equity markets respond to all those things?
Equity markets had another decent quarter on the whole. The US did well again, but it was joined by regions such as the UK and emerging markets. In the UK, there's been a spate of takeover offers, which has lifted the mood a little bit. International investors are looking at that more closely. And also, of course, we've got the election, which provides the opportunity for some form of clarity and possibly stability, which also international investors have been wary of in recent years. If we look at other developed markets like Japan, that's gone off the boil a little bit. There's been some weakness in the currency over there. So too in Europe because of that surprise French parliamentary election. That caused a sudden drop in the French market. Over in emerging markets, there's been some good news really. China's looking brighter in terms of economic growth. The market's picked up after a pretty bad couple of years. In India, it was a rocky quarter. There was a slight surprise in the election results over there, but on the whole, it performed pretty well.
And what about bond markets?
Bond markets have been a bit quieter, and that's been a relief really after the last couple of years. Government bonds haven't done so well this quarter, which isn't so much of a problem for portfolios when equity markets are performing so well. And there's a sense that actually, where should equity markets perform poorly, they may actually do their job and protect the portfolios going forward. Corporate bonds have had another decent quarter of returns as well.
So with politics seeming to influence markets so much at the moment, how do you deal with that?
We generally try not to make these sorts of events influence our thinking. Generally, we don't believe that we know any more than anybody else and what the market thinks, what's included in market pricing. Even if we did have some sort of special insight, then we'd have to think about actually how that impacts markets. And that's an entirely different matter as well, very unpredictable. So generally, we try to sit back, think about the long term, just make sure that when we're constructing the portfolios, they're ready for some choppier times that may come about with the elections, but equally may not come about as well.
Let's drill down then into AJ Bell funds. How did they perform over the second quarter and in the year so far?
Generally, another good performance from the funds. The returns have been fairly progressive across the growth range of funds, and by that I mean that the higher risk portfolios have delivered the highest returns. Over the 1 year, that persists for most of the funds, apart from the Global Growth Fund, where the Chinese equity markets had a struggle, and the returns there have been impacted for that portfolio in particular. If I think about the income funds, they've done okay as well. But actually income-paying stocks or dividend-paying stocks haven't been quite as strong as their more growth-orientated peers in sectors like the tech sector in the US, for example. And then finally on the Responsible Growth Fund, that's had another decent year and 3 months, but some of the returns in the US have been missed just by way of the construction of that fund.
So James, have you made any changes to the funds recently?
We haven't made any changes to the asset allocation since January. We do have a couple of ideas that we're looking into, but it's too early to suggest that we'll take any action on those. Generally, we're trying to position these portfolios for the long term, and that means that we don't interfere in how they're positioned too often.
James, look, thanks so much for talking to us. We look forward to catching up with you and the rest of the team throughout the year.
Thank you.